I'll follow up on Palantir and Tesla. To follow up firstly on Tesla, we've seen inventories levels rise of new cars across the board, including Tesla, although there's been ebbs and flows. We've seen price reductions across the board. Now we're seeing interest rates, not be raised by the Feds. Is this potentially the light at the end of the tunnel for this slowdown we have seen in the auto market?
There's a huge potential for that. It will really just have to watch inflation. I think that's what a lot of the market right now is expecting, is that we've reached peak interest rates and hopefully peak inflation is behind us, and that we'll continue to work out things in the future. It's a little bit more complicated when I think about globally versus domestically. I think that the United States is in a pretty good place with respect to inflation, and that even though there may be little fits and starts here and there, that for the most part, the worst is behind us. I don't know that that's necessarily the case for every country internationally. And, different nations have different situations with respect to their supply chains, with respect to their debt situations. But I would say I think at least the worst is behind us. So.
And then to direct it more to Palantir, we've seen companies tighten their belts across the board. It's been a big theme for the past 6 months, 12 months, 18 months. Companies which have done that have been rewarded in the market. Look at a company like Meta. They've announced huge amounts of cuts, and the stock has absolutely rallied since they've done that. Are we, again, maybe going to see a bit of an inflection point where the macros slowly looking a bit better, and companies might start eyeing up spending? And although Palantir is kind of like a big cost reduction driver, a lot of companies are going to be tentative to open up their wallets to a big $10 million, $100 million deal. But now could we maybe see that market get a bit easier?
Potentially. I think this will depend a lot on just use cases that Palantir, as Palantir announces more deals and the Palantir's customers are more public about the value proposition of the software, I think it's just a flywheel, and it's a snowball that continues to build. As rates decrease, you definitely, the cost of capital is a huge part of a company's decision to spend. And so if we do see rates decrease, that significantly loosens the purse strings on people being willing to spend, especially if they know that they can get a relatively short return on investment for that money. And like we said, they already work with very large companies and customers. There's a lot of proof in the pudding as far as the value of their product. But every time they convert one more major customer, well, that means that they have that much more surface area of people that have experience with the product. They know, there are major executives at large companies that are having conversations with their coworkers, with people in the industry, and that word starts to disseminate out among people, and the value of the brand of Palantir grows to a point where people are more open and willing to explore that opportunity. And then, it also seems on the other side of things that Palantir's open to being flexible in the way that pricing works so that they can get people over the bar. And as we reach a point of increasing operating leverage for the business, for Palantir, I think there's a lot of creative deal structures that they can strike, and they're not really at a point where they're feeling pressure to reach, to significantly front load the value of their contracts so that they can reach profitability now. They are profitable, and Alex Karp is a very patient CEO. He's always thinking long term. And so if they can actually backload those deals to where the customers are paying more for Palantir's service, the more value they get out of it, Alex strikes me as the type of person who's 100% good with that deal structure. And I think that's another thing that will help close deals here in the near term.